Natural gas prices are looking very interesting. The reason for saying this is that the price is stuck in an ascending triangle pattern. We get this by applying this horizontal trend line here. The price is trying to push above 3.81 a couple of times here on May 21st, May 29, and also on June 5th, but failed. Moreover, it did try to break out here on June 6th, but also failed. Now, I'm ignoring the fact that we pushed above that little level. Then we can draw a trend line from here to here, and we get the complete pattern. Now, for this pattern to trigger, we need a break above here. So if we break above 3.81, then the pattern suggests we could rise with roughly 9% and hit 4.16. If one would trade this, say, buy on the breakout, place a stop loss below that level, maybe at a 1.91% slide, then that will provide a risk to reward ratio of roughly 4.74. Now that's a really good risk to reward ratio. Now I don't know if you see this, but there's some more interesting patterns in natural gas. So if we link these levels together, we were dealing with a massive triangle. Okay, it's not perfect. We don't touch this several times, but we could let's be a bit more sort of, let's try to adjust this like that. Okay, so now you have, don't even have to work with that big line, although it's possible. We can work with something like this even. Okay, so now we're dealing with a triangle. Okay, and this triangle breaks roughly at the same place as this smaller ascending triangle breaks. And that's great because when we combine a small pattern with a big pattern, we can sometimes use the take profit level of the big pattern as exit. So this would suggest a 27% movement up to these highs. So then suddenly, if this really flies, you get a 27% upside, and then your risk to reward ratio is 14x, which is obviously a very aggressive risk to reward ratio, but fully possible in something like natural gas. What do you think? Leave your comments below.